look at is the short-term or secondary trend. And that's one that lasts for a few weeks or a few months. And the reason I say it's the most popular is because most traders that I've spoken with over the years use something like the 15-minute or the 30-minute or even the 1-hour time frame. So typically they're looking at a period of time that spans about 1 week, maybe two, up to about 2 or 3 months. And that brings me to an important point, and that is that the terms uptrend and downtrend are really incomplete thoughts without specifying a length of time. So if you come to me and say that the Euro USD is in a downtrend, my next question is going to be, well, are you referring to the long-term, intermediate, or short-term? Because that's going to matter. If you're talking about the last few weeks being in a downtrend, if we scroll back on a chart, maybe the last 3, 4, or 5 years, the pair is actually in an uptrend. So saying that something is in an uptrend or downtrend is really an incomplete statement. All right, so now that we know that, let's take a look at what actually illustrates or defines an uptrend or a downtrend, and that is the swing highs and lows. And this is what we've been talking about this entire presentation, is that much of what we do as price action traders comes down to swing highs and lows. So here we can see that we have a market, and granted this is just an illustration, but I'll get into an example in a moment. But here we have a market that's making higher highs and higher lows. And this is really basic stuff, but honestly, folks, this is what it comes down to. As a price action trader, everything that we do is really pretty basic. Okay, and just the same for a downtrend, as you might guess, it's the opposite, right? So we have a market that is making lower lows and we've got lower highs. Okay, so now as you might guess, the way that we identify a change in trend is also based on those swing highs and lows. All right, so here we have a market that has made, in the beginning, higher highs and higher lows. So if we look back here, we can see that we've got higher highs back here, and we've got higher lows. Now, notice that this swing high right here is the first time that the market didn't make a higher high. So if we see this, this is kind of a sign of exhaustion. So if you're looking to buy, you might want to be careful at this point, but it's not until this low down here that the market really starts to reverse. All right, so again, really basic stuff, but you can also see how powerful this can be. Now, remember a bit ago, I mentioned that if you're not using trend lines, you're at a disadvantage. And here's what I'm referring to. So again, just an illustration, but we're going to look at a chart in just one moment. And here I want you to notice how this market was making higher highs back here, but all of a sudden it started to make lower highs. And what's really key about this is that every test of the trend line, in terms of the days it took to rally higher and come back and retest it, was shorter and shorter. So we had 35 days, 25 days, 10 days, and then 5 days. Now, the result in most cases when a market does this is a break to the downside. All right, so notice that same exact illustration. What happens is the market closes below the trend line and then it retests that level as resistance. Now, this is the area right here that we want to look for sell signals. All right, so when we talk about how to identify that a market is likely to reverse, using a trend line in this way and watching how the market reacts to that level over time is really key. Now, another way that you can also identify a change in trend is, in addition to looking at the amount of time it takes for a market to test a trend line. Okay, so here we have the different points where it's testing, and notice that it's also getting smaller. However, in this case, we also have what I call clustering, or sometimes as heavy price action. And what that means is that you get a market that starts to retest it. Back here, this may have been, let's say 20 days, 10 days, 5 days. And then all of a sudden you get these tests that only take a day or two. okay, this clustering price action right above the key level. And again, in this case, the result is typically a break to the downside. Now, here's one that happened on a chart a while back. This is actually a 4-hour chart, and you'll notice how the currency pair was in this ascending channel, and you'll notice how the distance between these retests is fairly close, right? It's not getting closer. And then